A multifamily property, you could actually go up to 4 units with a 580 credit score. It's not the score, it's more so that anything more than 4 units is going to be considered commercial. Okay. So 5 units, 6, 12, whatever, that's going to be considered commercial. And with commercial, you're going to have to put down a stronger down payment as well, too, about 20 to 25% in most cases. But if you are going with a 2 unit property, that's where you have a unit at the bottom, unit at the top. Some situations have it where it's left and right. In this video, we're going to talk to you guys about what credit score is needed to purchase a rental property. Okay. So for many people who don't know, you only need a 580 credit score in order to purchase a rental property. It's the same credit score that's actually needed to buy a single family home. So when you talk about a multifamily or single family, it's essentially how many families could live inside of a property. Now, I know technically if you got a 4 or 5 bedroom home and you and your family use 3 bedrooms and you may have another family live in it, then that's not necessarily the case. We're talking about how many gas lines, how many mortgages, how many bills, how things are separated where they can have their own living space. Okay, that is what you call a rental property, when you have separate living units, front door, back door, things of that sort. Okay, so a multifamily property, you could actually go up to 4 units with a 580 credit score. It's not the score, it's more so that anything more than 4 units is going to be considered commercial. Okay, so 5 units, 6, 12, whatever, that's going to be considered commercial. And with commercial, you're going to have to put down a stronger down payment as well, too, about 20 to 25% in most cases. But if you are going with a 2 unit property, that's where you have a unit at the bottom, unit at the top. Some situations have it where it's left and right. Either way, that type of property, you're only going to need a 580 credit score. But it's not just the credit score that you need to have in place. You need to make sure that you also have the savings in place as well. A 2 unit property is just like a single unit property. And I know what you're thinking. You're probably thinking, well, Calvin, you know what? You didn't mention anything about a 3 unit or a 4 unit. I'll get to that in a second because it's actually a little bit different. When you're getting a 2 unit property, it's just like a single family property. So you need the 580 credit score. And if you're going FHA, you're going to need 3.5% down. If you're going conventional, then you may qualify for 3% down, 5% down, 10% down, 15% down, or of course, 20% down. You also need a higher credit score to go conventional as well, as minimum about a 650, but to be safe, about a 680 or higher. Okay. Now, when you are going with a 3 unit or 4 unit, you still can get in with the 580. However, you must have what they call reserves. Now, reserves are essentially how many months of the mortgage do you have already put up. For example, if the monthly mortgage is $3,000, then they want to know how many times could you cover that mortgage, and they need you to be able to cover it at least 6 times. So you need 6 months of what they call reserves. Okay, and so it would be 6 times 3, for example, will be 18,000. Now this 18,000 doesn't have to be sitting in your checking account, your savings account. It could be a mix of everything. It could be your checkings, your savings, your 401k, any investments that you have, investment accounts. So that's essentially what it can be, and you can have it mixed, a little bit here, a little bit there, and as long as that equates to 18,000 or whatever that 3 months of reserve, 6 months of reserve, whatever that monthly mortgage payment is, then that's what they're going to be looking for. Once you have that in place, then you can go ahead and start the process of looking for a 3 unit or a 4 unit property. The reason why they put you in position where you need to have months of reserves is because usually when you're buying a 3 or 4 unit property, typically you're buying that obviously to collect rental payments. Okay. But at the same time, what happens if, someone does not pay the rent or something like that? They want to make sure, or what happens if the unit is actually vacant? They want to make sure that if something happens, it goes left or right, that they have a reserve already sitting there. So the mortgage is actually being paid. Okay. And so that's essentially what you're looking to do, is have that in place. But a 580 is going to get you in the door. Let's talk more about that. A 580 is just going to give you the green light, but it's not going to give you the best terms available. Okay. The best terms available are essentially going to be what they call the market rate. Okay. We talk about this actually in our first time home buyers guide, which you guys can go ahead and download today right now for free. The link is out the description below, or if you're watching this on your TV, then you can go ahead and scan this QR code to my right. Okay. And so that's when you can go ahead and grab the free ebook, and it breaks that down, as well as some other entry-level things to learn about home ownership and rental property ownership as well. Now, the next thing that you're going to know is that the next level, the next tier is going to be 620. So 580 gets you in the door, doesn't give you the best terms, doesn't give you the market rate. The market rate is the best rate that you can get that is available, in the market. So of course that's going to change every single day. But if you're a 620, then you're going to automatically get that market rate. And of course, if you're higher than that, it doesn't really matter. So, when you're buying a home or rental property between 620 credit score and 850, nothing is different. Everything's the same. Okay. So whether you're 620, 720, 820, 850, it does not matter. Everything's going to be the same if you're going FHA. The fact that you're going FHA and you're putting down 3.5%, and which, by the way, anytime you don't put down 20%, there will be an additional monthly fee called a PMI. That's private mortgage insurance. That's for another video. But either way, mentioning that to say that if you're going conventional, that's the only time the credit score needs to be a lot higher. Versus if you're going FHA, you're putting down 3.5%. Then, of course, the 620 is all you need. And that's still going to give you the market rate, which is the best rate available. Okay. So, of course, if you guys like this video, most definitely going to love the next one. And I'll see you there.